Hey guys, I want to thank you for joining the presentation today, the free webinar of Are You Audit Ready, presented to you by Ms. Tammy M. LLC. I am Tammy M., an enrolled agent and a certified fraud examiner. Here at Ms. Tammy M. LLC, we specialize in tax audit and resolution services. Today's free webinar, Are You Audit Ready, is basically to make sure that you guys have your information, your documentation together, and an understanding of what happens when an audit is conducted either by the IRS or state and local taxing authorities. I felt that it was very, very necessary to put on this webinar just to help educate. That is my thing. If you know me personally, if you've worked with me, you know my thing is education. So yeah, I'll be having these free webinars twice a month, and please check in. You can either do it live with me or you can go to my YouTube, Taxi Tammy. Visit me at my YouTube and check it out at your own time. Either way, it's going to be valuable information that we as tax-paying citizens need to know. So let's get started. Like I said, my name is Tammy M. I am a former IRS agent that knows what the IRS is looking for, from tax audits to levies, liens, garnishments, collections. I'm literally able to handle it all. Former IRS agent, current enrolled agent, former certified fraud examiner for Manhattan and the Bronx DA's office. And before all of that, I myself was a tax preparer of 2 years. So trust me when I tell you, I know this tax game from beginning to end, start to finish, however you want to say it. For you guys that know me personally, know that I had experienced a violation of my own from the IRS where they audited me or did an unjust audit, shall I say, before working with them, and I owed back $12,000 at the age of 21. Very scary, but at that point in time, I had no idea how to conduct an audit, what an audit consists of. I was simply a tax preparer, and a lot of tax preparers don't have the knowledge of tax preparation as well as audits. So going into working for the IRS or making that decision to work for the government was a really big eye-opener for me. And after going through 9 months of training, I realized that the audit that they conducted on me, one of their own, was actually unjust and a violation of my rights. But they did that because at that time I didn't know my rights. So that's why I'm here, literally fighting for the public and fighting for you guys against the IRS and state and local taxing authorities, because they will violate your rights if you do not have the knowledge of them. So today we're going to go over tax audits, W-2 employees, small business owners, what to do if the IRS contacts you, and how to protect yourself. So the tax audits is where we are going to start. Let's get started. Tax audit. Why do people get audited? That is the number one question that I get either to the hotline or to my email is, why am I getting audited, Tammy? Please tell me what is going on. What did I do wrong? It doesn't necessarily mean that you did something wrong. Why do people get audited? There are a few reasons why the IRS or state and local taxing authorities audit people. Number one is by random. Literally, that the bulk of the audits that are brought in are by random. They just feel like chucking. You win the audit lotto. It's really that simple. Related returns. So related returns can be a little bit tricky because they can be a husband and wife who filed separately. They can be a shareholder to a company that's being audited, or vice versa. There are a host of reasons why they are related returns. So those are just some of the more popular reasons. DIF score. What is a DIF score? So a DIF score is a scoring system that the IRS uses. The IRS uses to determine if people are above or below the BLS, which are the basic living standards. The basic living standards are available online for each state And they narrow it down. Well, some states narrow it down to the county, and in New York, they narrow it down to the city. So if your DIF score, let's say in Brooklyn, the DIF score for contributions is about $7,000 average per household, and you put $25,000, that's going to jump the DIF score. So when that jumps the DIF score, it kind of sets up a little red flag for the IRS to say, hey, this person is about 3.5 times over. This person is about 3.5 times over the DIF score. We need to look into if these contributions that they're claiming are real and true. The next thing are project audits. So let's talk about those. One of the most popular project audits is called NRP, National Research Project. In the inside, they call that the purple folder. Thankfully, the IRS is no longer conducting NRP audits as of October of 2022. They stopped that program. That program was horrendous. When I tell you it was horrendous, I can't say anything else other than that program was horrendous. That program literally checked your tax return from top to bottom, to the spelling of your name, the birthday, your social security number, down to the very last penny of any expenses that you claim, any contributions, any taxes that you took, anything on the return was checked. Those were horrendous tax returns, not only to do as an auditor, but to actually, provide documentation for as a taxpayer. And the IRS had to make adjustments on your tax return basically for any penny that wasn't accounted for. Very tacky, very classless, but that's what an NRP audit consisted of. An FBAR audit. So FBAR audits is another type of audit. It is for taxpayers who have a foreign reporting requirement. So if you have a foreign bank account, if you have a job that's overseas, anything like that, you are required to file an FBAR. There are other project audits, but these two are the most popular. The last reason why people get audited is going to be because of whistleblowers, aka a snitch. People will literally call into the IRS and say, hey, I know that ABC company is underreporting their income because they accept cash payments that they don't necessarily put into the register. That is a whistleblower case. The thing about whistleblower people see dollar signs when they see this. What does that mean? Whistleblowers get paid. They don't get paid until the income is actually collected, but they will get paid a certain percentage if the people or persons or company that they whistle blew on results in a tax liability and a paid tax liability at that. So those are the reasons why people get audited. But the majority of the reason why people get audited is because audits are done by random. What are the different audit types? There are 3 different audit types. You have mail, which is done by correspondence. The IRS is stepping their game up, and now they have secure messaging, which is kind of awesome. So instead of you going to FedEx or printing out hundreds and thousands of pages, you can electronically submit your files over to the IRS via secured messaging system. I love it. There are still a lot of mistakes. The IRS's technology is very much so behind in comparison to other companies, but it's a step up, it's an upgrade, and it is very, very helpful. Another type of audit is an office audit. An office audit is when you, the taxpayer, goes into your local office and a TCO, which is a tax compliance officer, conducts your audit. You have to bring all of your documentation with you, lug it over to the office, and you sit down with a tax compliance officer, and they conduct your audit. Those audits usually last for like 4 hours in one day. They have a very quick turnaround time. The last audit type is going to be a field audit, is which I used to be. I used to be a revenue agent, which is a field agent. The field audits are usually done on taxpayers with small businesses. Field audit means that the agent is coming to you. The agent is going to be doing a tour of business, looking at your business. The agent is going to be coming outside of the office, and they will meet you where you are. One thing about these audits is the agent is not just there to conduct an audit. They are using their eyes, looking around the office, doing a tour of business, looking at the employees, and comparing it to things that are on the tax return. Equipment that you have depreciated or expensed on the tax return. They are literally in your space, in your area, checking for all of these things that you deducted on the tax return. So those are the reasons why people get audited and the type of audits. Moving on. We're going to talk about W-2 employees and audits. W-2 employees, reasons for audits for W-2 employees. First, we're going to start off with the W-4 check withholding. If you get paid weekly, bi-weekly, monthly, however your checks are set up, you want to check that your W-4 has the right exemptions amount. You do not want to check tax exempt. You're going to have a problem at the end of the year, or maybe even during the year, that will cause an audit because you're not paying the correct Medicare, Social Security, federal, state, and local taxes. That is on all levels. The state, local, and IRS level may, bring up an audit to make sure that your W-4 withholdings are correct and that you're paying into all of these big pots. The other thing is going to be when you buy or sell an asset. I have clients that buy and sell assets throughout the year, and they don't believe that their gain belongs on the tax return. 9 times out of 10, the asset that you purchased or the asset that you saw created some type of documentation that was sent over to the IRS because of the amount of the asset being purchased or sold. With that being said, the IRS has documentation that this asset has been purchased or sold underneath your Social Security number, and that amount is then, or at least the gain on the amount, is taxable to you. And if it's a loss, you can go ahead and put that against your income on certain things. That's a whole nother thing for a whole nother day, whole nother lesson for a whole nother day. But buying and selling assets, you want to check with a tax professional before you buy or sell any big assets and see how that works out in your tax situation. Lifestyle changes, having a child, death, moving to another state or city. All of these things affect your tax return, and if they're not reported correctly, could cause you to receive an audit from the IRS. If you're having a child and you're married, make sure you put that child on your tax return. If you are having a child and you're not married, did you and your partner discuss whose tax return that child is going to go on according to the IRS laws and standards in place? Death. If your spouse died or child died, passed away during that year, are you sure on how to report that? Do you still file married filing jointly with your spouse, or do you file as a widower? Those are things that can cause an audit. So you want to make sure, again, that you're speaking to a tax professional about these different lifestyle changes, moving to another state or city. I see this all the time when I have somebody who still works in New York, still works in one of the 5 boroughs, but moved outside of the city or even outside of New York State. They now have 2 states to report to throughout the year, and it gets a little confusing because one state you owe money to and the other you don't. So that lifestyle change, if not done correctly, could cause a state or local audit. Retirement accounts. IRAs, 401ks, withdrawing and putting money into these accounts are taxable transactions. And if they are not reported correctly, they can cause an audit. Gambling winnings create notifications to the IRS as well. So you want to make sure that you are keeping track of your gambling losses, so you can put them against your gambling winnings to a certain extent, and you can claim your gambling winnings on your tax return because they are taxable. Charitable contributions. Yes, with the TCJA Act, a lot of things came in place and charitable contributions were limited, but some of us are still able to take the deduction for that on the Schedule A. You want to make sure you have the proper documentation in place and reporting the proper amount. No overrides, but what is required and what is allowable by the law. Because reporting charitable contributions can also trigger an audit, like I did in my example. And you want to be ready with that, with your receipts from the charitable contributions in which you contributed to. Settlement agreements. This is a big one. A lot of people feel like, hey, I got a settlement agreement. It's not taxable. Not all settlement agreements are not taxable. So you need to make sure that you are speaking not only with your attorney, because not all attorneys are aware of the tax law for your specific situation. You want to speak with a tax professional, get a consultation to make sure that your settlement agreement is taxable or not taxable and is being reported properly on your tax return. So this little area right here was for the W-2 employees and why you would get audited. Different reasons on why you would get audited. I know a lot of people think I'm a W-2 employee. That doesn't apply to me. Audits apply to everybody. Like I always say, anybody can get it when it comes to an audit. Next, we're going to talk about our small business owners and why they get audited. Small business owners, or how to make sure you're ready for an audit. First thing you want to do, you want to keep your business separate from your personal. The IRS does not like commingling. Neither do investors, but particularly the IRS does not like commingling. So when they see commingling during an audit, what that does is it makes it very confusing for them to decide what is personal and what is business related when it comes to expenses. So what do? They leave that completely up to you. But as far as income is concerned, the IRS burden of proof of income is on the IRS. So the IRS will take all of your deposits and make that income. And when you're commingling funds, you may get a deposit from your grandma. You may get a deposit from a significant other. And that's not necessarily gross receipts. But the IRS burden of proof of income is on them. So what they're going to do, they're going to make it all income, and they're going to make you responsible to tell them different. And until you tell them different, it's income and it's taxable. So you want to make sure that you are keeping your business separate from your personal, separate bank accounts, and no commingling of funds. You want to use an EIN number. An EIN number is also going to make sure that your business is separate from your personal social security number. Things will come in underneath things will be reported to the IRS underneath your EIN number and not your social security number. And that'll be another way to determine whether the income is personal or if it's business. You only want to swipe your card for business use. That means your business card. You don't want to swipe your business card for personal use. Again, that goes back to commingling. When you want to pay yourself from your business, you want to make a withdrawal to your personal account for personal expenses. You don't want to swipe, like we just said, your business card for personal expenses. Make a withdrawal. And make sure you're using the memo section, because in the memo section you can say owner's draw, personal use. You can notate that. That notation is going to help you out in so many different ways. I mean, so many that you cannot even understand when it comes down to dealing with the IRS and winning the audit lotto. You want to keep your receipts and invoices. Keep all receipts of expenses for your invoices and for your business, and invoices should be kept up to date. Make sure all of this stuff is tangible, easily accessible, and ready in the case of an audit. There is nothing like recreating books and records because you did not keep your receipts. It really is as simple as taking pictures and uploading them to QuickBooks, taking pictures and making sure they're in your phone. The IRS cannot dictate how you keep your books and records, but you must keep books and records. And the last one, what does it say? Books and records are a must. Whether it's QuickBooks, handwritten books and records, Excel spreadsheets, receipt books. Receipts in a box are not acceptable. The IRS will not accept a box full of receipts that are not organized in a manner in which they can comprehend and read. It is your job to keep books and records. Next, we're going to talk about what to do if the IRS contacts you. Dun, dun, dun. A lot of people get really, really nervous when it comes to this part because nobody wants to win the IRS lotto. Nobody wants to see that Internal Revenue Service or New York State Department of Taxation. Nobody wants to see those letters. I don't even like to see those letters with my name on it. But what to do if the IRS contacts you? The IRS contacts you, the first thing you want to do is you want to open the letter. Do not let the letter sit. Do not put it to the side. I beg of you, if you are at your mailbox, open it immediately. So at least this way you can get that anxiety and that pressure and that dark cloud over your head, and you can deal with it right, or at least know what's going on right there and at that moment. You're going to read what they're asking for. IRS letters can be very complicated, and sometimes they're very straightforward. I think it's people's nervousness and their nerves that make it so then they don't really know what's going on in the letter. But I promise you, just read it. Read it a few times if you need to. Look for the due date. That is the first thing you should be looking for. Not the amount that's owed or anything of that nature, but the due date. IRS likes people to be on time with correspondence. Call. Whenever the due date is, call 2 days before, call the day before, call the day of, but do not call after expecting to get some type of, if you're looking for any type of just call. Ask yourself if you're capable of providing what they are requesting. Read the letter in its entirety. Ask yourself, am I able to give these people what they are asking? And how? And what's the time frame in which I can do it? You need to make sure that you have what they're asking for. Last but not least, seek help. If you don't understand the letter, do not wait until the day of, the day before, 2 days before. Reach out to a tax professional and seek help. Seek help with comprehension. Seek help to see if this is something that applies to you. Seek help. There are so many letters that go out to the IRS. I can't even begin to tell you how many people seek help months later when the situation is a lot more sticky than it would have been if we would have sought help from the very beginning. Seek help. Respond. Respond by the due date, if not before. You need to respond. I cannot stress that enough. The same way that you want people to pay your invoices on time, the same way that you want your paycheck to show up on time, they want a response on time. Don't let them intimidate you. The agents on the phone are individuals just like you and I. You are there for clarity. It is their job to give it to you. Do not let them intimidate you. I know it could be quite frustrating because they speak a completely different language. And for them, it's quite frustrating because it's a second language to them, just like it's a second language to me. So you got to find a median and a way to speak to them. And if you can't, again, seek help. Seek representation. Seek somebody who can help you through this process. But do not ignore. Do not ignore. A lot of people like to throw IRS letters to the side. A lot of people like to ignore them and thinking that the situation is going to go away. I promise you, the situation does not go away. It gets worse if you ignore it. So make sure you are opening the letter, reading the letter for comprehension, looking for a due date, and responding by the due date, if not before, but never, ever, ever ignoring. Protect yourself. That's a big thing. A lot of people feel like they don't have any protection when it comes to dealing with the IRS, and that is not true. As I stated when I first started this webinar, that I myself, as an IRS employee or as somebody who was, coming into service with the IRS, experienced a violation of my rights in an unjust audit. And I didn't know how to protect myself at that moment in time. I had no idea what to do. All I know is I was 21 years old. I had a newborn baby and I needed this job and they wanted $12,000 from me. So I needed to find a way to get it. And I did, and I paid it, and I got on board. After 9 months of training, I realized what they did to me was completely unjust and a violation of my rights. And I wish I had known how to protect myself. Well, here at Miss Tammy M LLC, as I already discussed, we are a tax audit and resolution service based company. We offer several resources for you guys to protect yourself. So the first thing is going to be our membership, the Tax Lookout membership. So if you are somebody who constantly has correspondence either from the IRS or state and local taxing authority, and you just cannot seem to get your head above water, can't seem to figure it out, you can't seem to understand what is going on, why am I always in some type of trouble with the IRS, the Tax Lookout program is for you. It is a monitoring program where we here at the company monitor your transcripts on a month-to-month basis. We inform you if anything new happens on your account. Anything new happens on your account. So if you get a new letter that's sent out to you, if they change anything on your tax return, any type of notifications, we make sure that we contact you immediately to let you know, hey, this is the new thing on your account. And if nothing happens on your account, great. You still get a copy of your transcripts every single month. Another membership we offer is Tax Audit Protection. Tax Audit Protection is something that you can apply to a tax year that will last you all the way until the statute is blown. What is the statute? A statute on a tax return lasts 3 years. So if I filed on April 15th, 2020, it's going to expire on April 15th, 2023. With the Tax Audit Protection, we are able to provide you with a transcript pool. We're able to give you some guidance on what happened if you were to receive any correspondence from the IRS. So it's literally it's insurance for your tax return. If you were to receive a correspondence, you contact us and we will look into it for you. You get a discount on tax audit and resolution services such as representation, calls to the IRS, and things of that nature. And it's a one-time fee that covers that particular tax year until the statute is gone, which is generally 3 years. Other services we provide are consultations, transcript pools and analysis, IRS call, tax return review, and tax investigation. So if you guys are interested in any of these services to protect yourself from the IRS, because you have the option to protect yourself, and don't ever think that you don't if you get a phone call or a letter, you always have the option for protection. You can reach us at www.taxauditresolution.com or call us at any time at 1-844-772-8348. Our lines are always open and ready to accept any phone calls. I really appreciate you guys joining me today for this webinar. And if you have any questions, go ahead and write them down below and I will be, honored to answer them. Again, this is Tammy M with Miss Tammy M LLC and Taxi with Tammy. This is Tax Tea Tuesday. Please be on the lookout for more free webinars like this to help you guys out. Generally on Tuesdays, on Tax Tea Tuesdays, 2 times a month. Sip the tea wisely, guys. Take care.